And I had a mentor, a soccer dad that was a really wealthy land developer and a builder. And I wanted to learn real estate. I wanted to learn a lot of stuff. And his advice to me, and this was back when I was 18 years old, helping his son get better in soccer and training him. He said, well, if you want to learn real estate, he goes, start where the money is. He goes, because everybody needs money. And so if you can learn the money behind real estate, then you can learn real estate, because no real estate gets done without the money.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Craig Melton, has been active in real estate for over 40 years. He's been active across multiple segments, including lending, mortgage banking, new construction, short-term rentals, and fund management. He's now building real estate portfolios to offer long-term wealth and income. Craig, welcome to the show.
It's awesome to be here. Thanks for having me.
Thanks for coming on today. Thanks for taking the time. And gosh, where do we start, right? You've got history across so many different segments of the real estate space. Was lending the way that you made your entry point into real estate, or were you an investor first? How'd you get into real estate?
Yeah, I had a mentor. I grew up coaching soccer, and I had a mentor, a soccer dad that was a really wealthy land developer and a builder. And I wanted to learn real estate. I wanted to learn a lot of stuff. And his advice to me, and this was back when I was 18 years old, helping his son get better in soccer and training him, he said, well, if you want to learn real estate, he goes, start where the money is. He goes, because everybody needs money. And so if you can learn the money behind real estate, then you can learn real estate, because no real estate gets done without the money. So learn the money first. And so that was really good wisdom. And so that's what I did. I actually got in the mortgage banking business and went to where the money was and where people had to look for money to buy real estate. And so
Yeah.
I learned the real estate mortgage banking business at a real early age. And then from there, dealing with realtors, dealing with builders, dealing with financial planners, dealing with everybody buying and selling real estate. You have to learn it if you're financing it. And so that's how I got into it.
The lending portion, I think even still is understated today. And I often think that, man, I wonder if I got into this game on the wrong side of the business, because I got in as a wholesaler and then later became a realtor now last year, 2025. And of course, as you know, once you go talk to a realtor, if you're a prospective buyer, what's the first thing they're going to do? Go talk to my lender, right? Got to get you pre-approved. And so that's where the deals, start and end, right? There's no talking until you've got the lending portion squared away. I actually want to dive in a little bit into that specifically, because of course lending has changed massively over time, and being a lender, mortgage loan officer, right, has changed over time as well. You've seen the peaks, you've seen the valleys, you've seen fast money, you've seen the industry dry up for periods of time. Do you have any advice for folks who may be just starting out in the lending space?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah. There's three main buckets to lending, and I don't care where you go work, you're going to work in one of these three buckets. But when you do, you need to learn all three, whether you're in them or not. What I mean by that, there's the typical mortgage broker where they work for a mortgage broker firm. And that just means they're, a middleman with the broker. And so if they're a broker, they really need to be really good at picking 3 or 4 or 5 good wholesale lenders that they work with and know the system so they can really do the chain of command the way they need to throughout the loan process. The second bucket is a mortgage lender. These are the lenders that actually have an internal team of processors and underwriters, and they might fund the loan, they might not fund the loan, they might be a delegated or non-delegated lender, and that just depends on how much in assets they have or the ownership of that firm has, and that decides whether they're a delegated or not delegated lender when they sell loans to Chase, Truist, and all the big banks. And then there's the actual mortgage banker, the mortgage person that actually works for the bank. And then the advantage to that is they have a whole team at their disposal. They might have portfolio lending for the bank. They might be able to do construction loans. They might be able to do lot loans, and they might be able to do that whole system tighter. Here's why I say all this for a new mortgage person getting in the business. I don't care where you're in. If you're in the banking firm or you're just a mortgage lender or you're a mortgage broker, I don't care what bucket you're in. You should know the process of all three because that's going to make you an expert in the field. Because that's how you're going to know your competition. And that's when you talk to realtors or financial planners or CPAs, you're going to really express your knowledge of the business. And the more you knowledge of the business, the more they're going to trust their clients to use you. And mortgage lending is all about lending peace of mind. It's all about giving somebody a comfort level because we're basically doctors. We give them a full diagnosis. And what I mean by that is, we're going to know your credit. We're going to know your assets. We're going to know your debt. We're going to, we got to get this bank statement. We got to track this large deposit. The regulation has changed and it's
Yeah.
crazy. And it's really hard for us to do a loan. And for us to do a loan, we really need to collect a lot of documents. And so clients need to be able to know you, like you, and trust you.
It's interesting to talk about how lending has changed, post Dodd-Frank, for instance, right? Because it seems like right now people need like a blood sample and the name of their next of kin and, good faith, right? In order to get approved for a loan, especially younger people. And when we talk about how things have changed over time, it hasn't always been the case, right? So you're in Florida. And when I talk with folks throughout the country, but Florida specifically, I hear these, kind of war stories from like global housing crisis where it was so fast and money, fast and easy money, right? And so you had, mortgage loan officers doing tremendously, and then overnight, just things evaporated, right? That can be difficult, right? To go through and then also to know that, hey, at any point in time, something similar could happen. It might not happen now or in 5 years, but 10, 15 years down the line, there could be a downturn. You've survived a couple of these.
Yeah.
How have you been able to weather the storm and what pivots did you make to get through that?
Yeah, that's a great, because in 98, we had the dot-com bust, and then 2001, we had the terrorist attacks, and then 2008, we had the biggest housing crisis. And I've lived through those ebb and flows, and then, mortgage rates up and down. And so I think it's just the relationship building I have with my network partners. Money can come and go, rates can go high up and down. But at the end of the day, your relationships remain strong. And we're in a peer-to-peer, a person-to-person business. And if you don't have those relationships in your network and your referral partners, you don't have anything. And so that kept me afloat. And, I don't mind to say it. I also had to grind and had bad years. And that's what, got me into real estate and diversifying into other things as well. And so at the end of the day, you just got to get stuff done. There's not one mortgage person, one real estate person, one entrepreneur, one business owner that doesn't go through ups and downs. And so at the end of the day, you got to get through your relationships and be just willing to work really hard during the down times and do things that you're not willing or comfortable doing sometimes to get through it. And so at the end of the day, you got to just get through it.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
You just got to get through it. And I think, the people that have had staying power have been able to weather the storm, have been able to make the pivots. It doesn't matter what segment you're in the real estate space, you can't use the same strategy, 10 years ago today in most cases. You have to pivot either due to market conditions, competition, changes in the law. Right, you're in the short-term rental space. When I was living in Dallas, right, they eliminated short-term rentals. So everyone who had Airbnbs had to turn it into 31-day, furnished housing, corporate housing, something like that. And so you have to be able to pivot. I do want to ask you about the short-term rental space, because this is something I think that a lot of people are interested in, right? A lot of people would love to have an Airbnb. So first, what's the scope of your short-term rentals? How many doors do you have in the STR space?
So right now, I have a company called Flip Flop Living, which is basically short-term rentals along beach towns. And so that's why we call it Flip Flop Living. And we have 4 doors that we rent short-term at New Smyrna Beach, Florida. It's a really cute little beach town caught between Cocoa Beach and Daytona Beach. It's a really good local beach for a lot of the Central Florida people that go to the beach. And I'm from the Outer Banks in North Carolina, Kitty Hawk, North Carolina. And the funny thing is and over 95% of the lodging in the Outer Banks has always been for its entire life, week to week rentals. People check in on a Saturday and then they check out on a Saturday, and then people check in on a Saturday to the next Saturday. And so I grew up in that space, being a young kid well before Airbnb and VRBO. So when I moved to Florida, and then it was never a thing here. I've said, people don't rent houses for a week at the beach. They go, no, they stay in hotels. And that was weird to me. So then when Airbnb and VRBO came, I was like, wow, this could be a perfect storm. And so what I did is I found a couple places, and the way we did is we took over one property and remodeled it and created 2 doors, beach duplex. And then the last one we just built from scratch. We bought land and then we built it from scratch. It was about a 1.5-year project. So it's a brand new beach home, about 150 yards from the sand.
Wow.
And so we have a website, www.flipfloplivinnsb.com. And so that's where our 4 houses are, our 4 doors there. And so that's how I got into it, because lending has got into that too, because you talked about the involvement of lending. Before the housing crisis, it was easy to get a loan. Then it became hard to get a loan. And then why we won't have a housing crisis of '08 anymore is because most people, if you don't show a lot of documentation now, you have to put a lot of money down, 20, 30, 40% down now. And if you do that, nobody's going to walk away from that loan. Where back prior in 2006, you could get a home at 100% financing. So if that house value went down, you could walk away from it because you had no equity in it. It's easy to walk away from something you have nothing in. But now they have what's called non-QM lending, non-qualified mortgages, and a non-QM DSCR loan, which stands for debt service cover ratio. There's a lot of non-QM lenders that do that loan for the short-term rental space. where the appraiser goes out and takes the average rents for the week or the weekend or the whole year. And lenders now, wholesalers, private equity funds, they will buy loans strictly based on the rental probability of that property. And an investor could come to somebody like me and get a loan and not show a tax return, not show a bank statement, and we can give them a loan with 20, 30, 40% down, depending on their credit score,
Yeah.
based on solely the rents, whether they're monthly rents, yearly rents, or short-term rents.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And so that has now evolved in the lending space, which has evolved in our real estate company, because now we're able to build these properties and sell them to other investors, and then we're able to lend to them. And so that's how I've gotten involved in owning, building to sell, or building to keep. Why the entire time keeping my mortgage banking job, because now if I build these and sell them to another investor, I now can do that loan to another investor as well that buys. And so that's got me into a whole new space of lending in this short-term rental space, because I know it as an owner, I know it as a builder, and I know it as a lender. So it's really given me a niche in my marketplace because I can be an expert in it, because I know what everybody's dealing with.
Yeah, yeah. And when we talk about DSCR, it also offers an opportunity for maybe newer investors to get involved as well, because you're looking at the cash flow of the property versus that investor. For newer investors who may be, trying to find a way in, of course, it's going to be different with every lender. But what advice, what feedback would you have for folks who may be looking at uh, DSCR to take down their first rental property?
That's a great question. So the best knowledge and wisdom I can give somebody is this. It's like a seesaw. The more experience you have, the less you have to put down. So if you want to just start, though, you better have good credit and you better have more money down. So if you don't have any history of owning a short-term rental property or any type of rental, a DSCR loan could be any rental. It could be just average rents as well, an average 12-month rental. It doesn't have to be short-term. So, but the lender, the requirement on underwriting is, what is their experience? How many other properties do they have? And so if it is your first property, they do treat you based on your expertise. And so if you don't have the expertise, you better have good credit. And if you have good credit, you better then have a little bit more money down. So like if you came to me and this was your first one, you might have to put 30 to 40% down and have a 700 credit score. Where somebody else, if this is their third or fourth, they might be able to only put 20 or 25% down. Because they're more experienced. And then that person buying that loan, it's not as risky for them because they know that person has experience. I would just set to say, if it's your first one, get your numbers right, really get your numbers right, and give yourself a little leeway, because you don't want your first one to be a bad one for you as an investor. And so what I tell people is, if the appraisal comes back that it's going to rent for $3,000 a month, try to get your numbers where they work at $2,800 a month, and not $3,000. Try not to stretch it. Try not to give yourself a bunch of stress. And make sure you have enough money to put down. And if you don't, make sure you can borrow it from mom or dad or a good friend, or get a partner. The good news is with these loans too, two people can do it together. So like you could go in and be a co-borrower, and two people can go in and get a DSCR loan if they have good credit.
Now, when we talk about short-term, a lot, in many cases, beach towns, right? You're looking at something that's maybe seasonal or very seasonal in some cases. Florida, maybe sunny year round, right? So you don't deal with that as much. But some places I know a short-term rental investor in like Yosemite National Park. I know STR investors in the Carolinas, right? That can sometimes be tricky, and there may be some of that in Florida as well, because you may deal with like a down season.
Yes.
But also generally I've seen kind of the opposite be true, shocking to me, but that if you have long stretches of time where there is not a booking, someone could come and book your short-term rental for a couple months, right? So what's your perspective on like placement of Airbnbs? Should it be closer to a major metro? Should it be in a beach destination somewhere, or should it be close to where you the owner lives?
Yeah, that's a great question. Why I did my first couple ones here in New Smyrna Beach, Florida, is because we have the best of both worlds. Um, we really don't have a down season. The ironic thing is, even when it's hot here in the middle of summer, people still come to Florida. And that's when everybody's off and the kids are off, and so even all the locals go to the beach a lot. Then when it comes to spring break in March, we have so many spring break seasons. Since Florida's so hot, our high school and college spring breaks are early on in February. But
That's
yet
right.
up north, Virginia, North Carolina, Georgia, all throughout the East Coast where people take spring breaks to Florida, theirs go deep into Easter. They're all through March, April, some of them, and then colleges get out again and at the end of May. So in Florida, we have a really cool niche. We have like a 3-month spring break season. It's kind of crazy. And then we have what's called snowbird rentals. So in the wintertime, we get people from Chicago and New York and people from Canada, and they'll come down and rent our place for a month or 2 months. And so then we don't even get a weekly or a weekend rental. We block it out for 2 to 3 months. And so that's why I picked Florida, to get a little bit of all of it. The locals that want to go to the beach in the summer, the spring breakers up and down the East Coast for a 2 to 3 month window, the snowbirds that want to come from up north in January, February, and March when it's freezing up there, and they want to come down here where it's 75 degrees and sunny on Christmas Day. So, that's why I picked that. That's just me. But, you're right. There's niches like in the Outer Banks of North Carolina. All your rentals are going to be between Memorial Day and Labor Day. Mainly, it's going to be, the summertime.
Yeah.
That's when everybody rents those places up. And then what you could do for the people that now live down there full time, you can break up your short-term rental, and then you can rent that for 6 months to all the locals down there that want to share it. And you could probably do what's called house sharing. And then like 5 or 6 people that all work in the restaurant industry down there can all get a bedroom. And then they can all pay like $600-700 a month to rent the bedroom. And then for 6 months, you can rent your place there in the off season. So you can get really creative. If you're going to be a real estate investor, you got to be creative to the marketplace. And you got to not have, like we said before, you got to be able to pivot, and you got to be able to try new things. Some things work, some things don't. But at the end of the day, the house is the asset, and how much revenue can you bring in by having that asset? And it's all about bringing in revenue to support your asset.
Yeah. When we talk about, you mentioned, divvying up the rooms, maybe like a pad split situation, right? So, that those summer months, Memorial Day to Labor Day, and I've heard it in some cases, those summer months can be so profitable, right? But then you also have to weather the winter months, unless you're in New Smyrna Beach, right? Or some area like this. We are coming up on time here, though, Craig. Where can folks go to reach out to you and maybe learn more about your business, or how can our audience get in contact with
Yeah, you could just anybody can Google Craig Melton. My bank, that my mortgage company that we work for, is One Presidential Mortgage. And if somebody were just to Google Craig Melton, One Presidential Mortgage, I pop up everywhere. I'm on there. The other thing is, if you wanted to learn more about short-term rentals or rent any of our properties, or get some consulting where I help people do the short-term rental market or help with lending, flip-flop living. If you just Google flip-flop living, Craig Melton, or flip-flop living New Smyrna Beach, our website pops up everywhere and our properties pop up. It's really hard not to find me online at just Craig Melton flip-flop living or Craig Melton One Presidential Mortgage, and my websites will all pop up.
Craig, thank you so much for your time today. Thanks for coming on.
All right, I appreciate you having me. Have a great day.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.